Thanks, guys, for that. And speaking of fuel, as you mentioned, Anthony, we've got our oil and gas expert, our editor-at-large, John Kingston, with us this morning. John, thanks for being on the show.
Glad to be here on a Friday, and congratulations to Anthony in New Mexico State.
We love to see it. Go Aggies. My dad is an alumnus there, so I'm a fan by association. But let's dig into a little bit what's going on with the oil markets this past week. I've noticed, just anecdotally myself, seeing gas prices slowly starting to fall here around the Chattanooga area. What's going on with the larger commodities markets right now?
Okay, so here, let's talk about trends. If you can discern a trend from this, you let me know. Last Tuesday, not 3 days ago, but a week ago last Tuesday, the price went up more than the price of diesel on the CME, the futures price on the CME commodity exchange, went up more than 50 cents a gallon to its all-time high. The next day, it dropped by an amount that was the largest single one-day drop. Then it dropped a couple of days, then it was stable, then it went up, and then it went down, and then it went up again. And we are about $1 down from where we were from the all-time high. But I don't know what the trend is. I don't know what that is. And so the wholesale prices will move up and down with those movements. So, I mean, we could do a whole show on why wholesale prices really pretty much have to follow the futures market. We won't do that today, but just trust me on this, they do. The retail prices, they're being buffeted by these wholesale moves. Some of these stations do refill every day, every couple of days. It's not like they have product that sits in there for weeks on end. So they don't know how to price. Yes, first of all, they're going to want to keep their high prices as high as long as they can. But when the wholesale number goes down by a huge amount one day, and then it goes up by 50% of that the next day, the question that they have is, what am I going to do with my retail pricing? I just don't know. I don't know what the trend is. So yeah, you've certainly seen some reductions in the pump price, but they haven't been very big. I mean, but depending on whether you look at our DTS.USA feed and Sonar, or the pilot truck stop chain puts all their prices online in these great downloadable spreadsheets. Thank you. Please never stop, because it's great for somebody like me. They're down like 6 cents a gallon. But no, there hasn't been a big decline. But we're having big declines in the futures market, followed by big increases in the futures market. Yesterday was the second biggest increase in one day ever in diesel. It's just crazy.
John, just as you mentioned, it's hard to kind of even discern what type of trend might be happening right now. There's just so much noise going on. But can you talk about the trend that was going on really before we saw this Ukraine invasion? It seems like there was an upward movement in prices. When we look at the most recent PPI, there was an increase in energy. There was already an upward movement in the February retail sales. As you look at where we find some kind of a baseline eventually, do you see this being at a kind of a higher baseline than some might expect, just because there was an upward trend kind of going into February already?
Yeah, we've got a pretty strong economy here. That's one of the reasons why having inflation as a problem. And commodity cycles tend to run this way. And it's not just oil. It runs in all commodities. The price of a commodity gets high. There's lots of investment into it to make a lot of production. You tend to get oversupply. Demand decreases as a result of the high prices. As demand is lowered or substitutes are found, the price plummets. Investment then plummets. Then the demand is spurred by the low prices and a strong economy, so that goes up. But the investment in the upstream production doesn't catch up. I mean, this trend has been going on forever. This is not first time. So we had a nice, long, comfortable downtrend, really between 2014 and I guess you'd say it probably stopped around late 2020, 2021, when the economy came roaring back out of the pandemic, and we're still feeling the results of that. Now, of course, on top of that, you have a loss of, well, now we can put a number on it. You probably have a loss of 3 million barrels a day of supply out of Russia. The reason that I say we can put a number on it is that the International Energy Agency this past week came out with its monthly report. This is one of the most widely watched reports in the oil business, and its estimate is that with mostly self-sanctioning. Some countries like the U.S. are formally banning Russian oil imports, but in most of the cases, it's just companies or countries that do not want to deal with it. So the IEA estimate is that 3 million barrels a day of Russian oil will have to be shut in as a result of these, official sanctions or self-sanctions. That's 3 million barrels a day lost supply on top of what was already a pretty tight market. So the equation comes down to how can you backfill the 3 million barrels a day? And it's surprisingly difficult. It doesn't sound like much. If everything went right, if the Iranian oil talks were allowed the removal of sanctions on that country, you might be talking 1 to 1.2 million barrels a day. Venezuela, if their sanctions came off, might do 200 to 300,000 barrels a day. Okay, so there we're not even at 1.5 million barrels a day, and we've got another 1.5 million barrels a day to go. What's the fastest way of closing that gap? The most painful way of doing it is demand destruction. What leads to demand destruction? Higher prices. So closing that 3 million barrel a day gap, as you can see, might be pretty painful because the few countries in OPEC have spare capacity, primarily Saudi Arabia and the United Arab Emirates, are showing no willingness at all to increase production. So we're kind of in a jam here. I know we've gotten a break on the price. It is down from a week ago, but we're not even into the summer heavy demand season.
And it's kind of this feedback loop, I almost feel like, when it comes to these market prices and these swings where you can't really discern a big trend out of. And this initial kind of reaction and spike over the last 2.5 weeks was to that initial Russian invasion of Ukraine and the kind of fear factor of what that would mean for the global markets as a whole. Now that we're 2.5 weeks into the conflict and we're starting to see some peace talks happen, maybe start to see a little bit of progress moving forward on the diplomatic side of things with the two countries. Do you see that having any impact on the markets, finding a little bit more uncertainty in the geopolitical climate, so that way you can put a little more of that certainty back into the global markets?
Yeah, I mean, certainly the markets have been reacting, at least in the very short term, to news on the Russia-Ukraine talks and any suggestion that there might be some kind of ceasefire or peace there. So, I mean, the market is probably ready to sell off pretty considerably if you got that. Of course, what you don't know is, is everybody going to rush to embrace Russian business again? Are these oil companies that are avoiding Russian oil like the plague, are they going to just go right back in and buy it? They probably will. But you'd have to see the terms of any kind of a ceasefire. But the market is very much looking at those negotiations, I think probably more than the general media is. I mean, there's news coverage of what's going on in the talks, but the far more wider coverage is of the actual conflict on the ground. But I can assure you the oil industry, the oil market is looking very closely at those talks. They don't want to get caught in a stampede downward if, in fact, there's some kind of a breakthrough.
And John, speaking on some of those geopolitical movements, can you talk to any role that China might play here and what that might look like if they start to kind of side a little bit more with Russia, what that might do to some of the commodities market potentially, if anything?
Well, I think the big question for China is just how much Russian oil they're going to take. I will tell you that I am not aware of what Chinese imports of Russian oil were before. But if you have Russia able to produce and they've been spurned by traditional buyers, will the Chinese buy more from them in a show of support? That's really the big question. No real firm answer on that yet. But quite frankly, in terms of oil, I think that is absolutely the biggest question or the biggest role that China will play. How much will it be a buyer of last resort? And if they are a buyer of last resort, does that 3 million barrel a day figure for expected Russian shutdowns, does that number diminish? Remember, a barrel of oil into the oil market, even if it goes straight Russia to China, that affects everybody. It's a global market, and all these things have ripple effects. So if let's say, most extreme case, all of the oil that went to places that it is now spurned by instead went to China, which imports, has I'm not sure what the total import figure is, but it's massive. They're like 70% import dependent. If all of that leaked out of Russia and went into China, you could see a stabilization in the oil market. Now, we can argue all day about whether that would be a good thing politically, but that's just the reality of it. South Africa was sanctioned by everybody and their brother for years, and believe me, they got oil.
So, John, really quickly before we let you go, you host our podcast Drilling Deep here on our Fruitwaves platform. Can you talk a little bit about this week's episode and what you got into?
Yeah, it should be dropping like right now. And I actually sat down with Greg Miller, who is my colleague and our shipping expert here at Freightways, and he brought everybody up to date on what's going on in Southern California. That was the story of the day a few months ago. It's still very much a story. We still cover it here on Freightways. But Greg talked quite a bit about where the situation is now, how it has gotten better, but why a long-term trend toward continued improvement might be kind of challenging.
Awesome, John.
I want to say one other thing. If I do this next week, I hope to do this next week. I'll be doing it from the floor of the Mid-America Truck Show in Louisville. First time going to the Truckload Carriers Association meeting in Las Vegas, and then flying to Louisville to the MATS show. First time that show has taken place in 3 years. I've never been, so I'm very much looking forward to it.
Awesome, John. Well, I'm glad you're going to be on the road. We're excited to hear from you while you're kind of moving and grooving around the country. Thank you so much for joining us this morning.
All right, thank you.
Go catch Drilling Deep on freightwaves.com or any of the platforms that you get your podcasts from, Spotify, SoundCloud, and Apple Podcasts. Right now, we're going to toss it to a quick break. We'll come back with a look at weather from meteorologist Nick Austin. I think we've got a shipper update from Anthony Smith as well.